Okay, the stock which is on our radar right now is Cyient. That's down more than 10% in trade. In fact, in the last 1 year, Cyient has underperformed the Nifty IT to the tune of close to about 40%. So while the Nifty IT has raced to a 25% rally in the last 1 year, Cyient is actually down nearly 15%. And the key reason is that after a miss in Q3, now the company is guiding for a weak performance even in Q4. So they have come out with a profit warning, which they say is a business update. Now, Cyient has two business lines. One is DLM, or design-led manufacturing, which is about 12% of their revenues and very low margins. There, the company has said that there has been an order delay to the tune of $5 million. And therefore, we will see a material Q-on-Q drop in the revenues in the DLM business. The chunk of the business is the services business, which is 88% of their revenues, which was expected to see a growth of 8.5% to 9.5% for the full year. And there as well, in Q4, the company has said that on account of delays in the aerospace as well as communication vertical, the services business will be quite muted. But we'll come back to Cyient in moments from now. On your screen is the Congress Party declaring the party manifesto for the upcoming elections. Let's cut across.
जो साथी पीछे खड़े हैं, मेरा उनसे सादर अनुरोध है कि अगर वो अपनी अपनी सीट पर बैठ जाएंगे तो कार्यक्रम का संचालन, ये एक ऐतिहासिक दिन है, इसका संचालन हम और बेहतरीन तरीके से कर पाएंगे। जो हमारे सेवा दल के वॉलंटियर साथी हैं, मेरा उनसे भी अनुरोध है कि प्रेस दीर्घा में कुछ और कुर्सियों की आवश्यकता है, उसका इंतजाम कृपया कर दीजिए ताकि जो साथी अभी खड़े हैं वो भी अपना अपने स्थान पर बैठ पाएं। और पीछे भी जो साथी खड़े हैं उनके लिए, हर साथी के लिए कुर्सी उपलब्ध है। अगर आप खड़े होंगे तो सबको ये कार्यक्रम नहीं दिख पाएगा, कृपया उसका भी इंतजाम करें। धन्यवाद।
The Congress getting ready to present its manifesto. The manifesto committee has been headed by the former Finance Minister P. Chidambaram, and he is going to be there along with the Congress Party President Rahul Gandhi and senior Congress leaders like Sonia Gandhi and others. We will, of course, bring you the details of the Congress manifesto as they are being released. I wonder if they're showing that on the video. I need to check with my producers if that is what is playing out on the screens that are on currently showing a video. I don't know if, yes, I think that is what it is. So let's just cut across and listen in.
Benefit transfers so that people have the money.
Well, I think they're just preparing. They're just preparing to play out the video to unveil the Congress manifesto, the first that will be unveiled for the Lok Sabha by Rahul Gandhi. That's former Finance Minister P. Chidambaram, the head of the Congress Manifesto Committee. We'll go back to that in just a minute as they get ready. But let's go back across to Rima and Nigel. They were talking about Cyient and the markets. Rima, you can toss it back to me once we get details from the Congress, but I'll hand it back to you for now.
Yes, everyone's keenly awaiting what the Congress has to say on the jobs guarantee scheme, the agrarian distress, as well as the Nyay scheme, which was announced. But let's get back to Cyient, because that is a stock on everyone's radar right now. It has tanked on the back of the profit warning. We are now joined by the CFO of the company, Mr. Ajay Agarwal. Mr. Agarwal, thanks so much for speaking with CNBC-TV18. First, if you could tell us what happens to your FY19 guidance. On services, you had guided for 8.5% to 9.5%. Is the actual services growth expected to be even lower than that? And even on DLM, you had guided for about a 35% growth for the full year. Will there be a miss?
Thank you for having me in. Q4 has been a sort of, while it is work in progress, has been a softer quarter than what we had anticipated. And we will see a growth of about 1 to 2% in case of services. And to that extent, I think in terms of the outlook for the full year, we are looking at something like 7.5% or so of constant currency growth in services. As far as DLM is concerned, we have facilities in India as well as in US. We should have a growth somewhere around 24-25% in case of DLM.
Okay, so Mr. Agarwal, you're telling us here on CNBC TV18 that the services segment, earlier in the year you were expecting double digit, that came down to 8.5% to around 9%, and now you're telling us it's likely to be closer towards 7.5%. So we get the picture in terms of the services segment. Also wanted to ask you in terms of margins. Earlier you had guided that margins are likely to expand by around 50 basis points. Then you had scaled back. You said that more or less it will be flattish, for this year. That would mean that Q4 should be a little bit better. Now, do you still hang on to those flattish margins, or are we likely to see some pressure out there as well?
I think there should not be any material impact on the operating margin outlook. We should be close to that flat outlook of margin year on year.
Okay. You said for the services business, you're now expecting a 1 to 2% growth in Q4. What was your earlier expectation, and what was the quantum of order delay in the services business?
That's a good question. First of all, let me clarify that in terms of whatever is the gap, we were really looking at this quarter to be, at least 3 to 5% kind of growth on services side, and we are ending up with 1 to 2%. The gap has not come because of any event which is structural in nature. There is no order that we have lost. There is no customer that we have lost. It is only that some of the execution has got delayed. So one is in case of communication, Asia Pacific region. We have been having some delays in the execution. And in aerospace also the same thing has happened. So I would say, yes, it is lower than what we anticipated. But these are all one-offs, and these do not reflect in any way the outlook for the business as a whole.
But it's two back-to-back quarters of softness in your communication verticals. Even in the prior quarter, communication was weak, and now this quarter too, on account of execution delays, you're saying communication will be impacted. Is this a bit of a structural problem that you foresee?
I will say that, we have three regions in communication. If you look at North America and if you look at Europe, I think we have been having extremely good growth. Asia Pacific, which has really seen, almost 50% plus kind of a growth in the last few years, is seeing some adjustments. If you look at the largest customer in Asia Pacific, I think they have been redoing their programs, doing some rework on their vendor base and things like that. And that's what we have been explaining in terms of some delays in those programs. So I think mostly it is impacted by Asia Pacific in communication, but still we feel that in constant currency we will be close to double-digit growth in communication this year, as I said, because of very handsome growth in North America and Europe. And it should be better for the next year compared to where we are in the current year.
All right, Mr. Agarwal, you're talking about delay in terms of some orders. The one that we're looking at is the DLM order. That was a $5 million order. You're saying that is likely to be delayed, as you've told us in your press release yesterday. It can be expected in the first quarter of the next fiscal?
Yes, I think as per the contract, it can be delivered by us in Q1. But we are also relooking at, focus between revenue and profit in case of DLM, and to that extent, we will explain to you what steps we are taking, and we may let go of some less profitable orders. So give us some time till the earnings update.
Okay, can you elaborate a little bit more? You said you will give up some unprofitable orders. Could you just elaborate a bit more?
I'm sorry?
No, Mr. Agarwal.
Manufacturing, you see there is a legacy business which we have been doing for the last few years, and then we have got the synergy revenues which have kicked in. Today we are in very good shape where this year our operating profit is almost doubling, and the major reason of that is the change of the mix for more profitable business. Some of those calls we have taken in this year, and some of those calls we will also take in the next year. Wherever these are low profitability orders, we will substitute them with our capacity. So we'll still have extremely good growth on operating profit, but we may to some extent compromise on the revenue.
Okay. Considering that the start of FY20 will see bunched up orders, How does that position you for FY20 growth? Will it be much better both for services as well as DLM? Because you will have the benefit of the delayed orders as well as the execution misses which impacted you in Q4.
Absolutely right. As I said, if you look at our key customers and services, look at all the segments, I think aerospace, for example, is looking very good when we have looked at our key accounts and looked at the budgeting process. So your observation is right. I think this low base itself gives us better opportunity for next year, if nothing else.
You know, Mr. Agarwal, if you, I think if I'm just looking at your market capitalization, it's close to around $1 billion approximately, around 6,600 crores. I think you have cash of around 1,200 crores. Could you confirm that?
That's right, round about
1,200
we
crores.
are using cash for buyback, so
Right.
it may be more like 1,100 crore
1,100
right
crores.
now. I don't have the exact number with me.
The buyback size is around
1,100 crore plus minus 50 crores.
And the buyback amount is only for around 200 crores, right?
That's right.
Would there be a possibility, given that the stock has been such a big underperformer, where the remainder of the IT sector has done, you know, in terms of a stock move, they've really gone through the roof in the last 12 to around 15 months odd. Would you contemplate increasing the size of that buyback, maybe support the share price even more? So your investors, you know, they're at least enthused that FY20 will look good, and added to that, the management is returning some money to the shareholders. Could that be a thought?
First of all, let me say that, you know, we are going through the buyback purely from the capital structuring perspective of giving the excess cash. And I don't think our intention was to support the price or do anything else. That's what is very evident. We have completed about 80% plus of the buyback so far. So I would say, first of all, I don't think we are using this for supporting the price. Second thing I would say is that in coming times, also, we continuously keep looking at what is our investment plan, how much is the cash we are generating. Because another good thing is our cash generation is very strong. We are generating $65 billion of cash every year. So I would not rule out any possibilities, but at this stage, to commit about another buyback will be too early.
Okay. Mr. Agarwal, on the communication business, where you're saying it's impacted an account in the Asia-Pacific region. Now, China is a very large player in the communication vertical. Are you seeing any slowdown from China, which is impacting your communication vertical? And the reason I'm going back to it, because it is a large contributor to your business, communication, semiconductor, etc. So is it an account of some weakness in China?
No, it is predominantly from Australia. If you look at Asia-Pacific, the largest volume of work that comes is from Australia for communication. It is not China. It is mostly Australia.
Okay, and one final question. You said for FY19, services will have a 7.5% growth, DLM at 24 to 25%. Any early indications for FY20 in terms of services, DLM, as well as margins?
I think we already spoke that, you know, the way we are looking at business, all our key accounts, no challenges on the structural side, also looking at some of the advantage of the low base. I would say definitely the way we are seeing in terms of growth, it is better than current year. That's how we are looking at in terms of our internal budgets. We are also running a program on cost optimization, which will also give us a substantial benefit for coming years on margin, including financial year 20. So definitely, I think both on revenue and margin, we will have much more robust year. But in terms of the numbers, let's wait till the earnings call for the Q4, and then we will be able to give outlook more specific.
Mr. Agarwal, thank you very much for speaking first with CNBC-TV18. So that is Cyient detailing out their new guidance for FY19. It's missed its guidance for the second consecutive time this year. As you said, in services, they'd started with double-digit, then they guided for 8.5% to 9.5%, and now the management tells CNBC-TV18 that they will end FY19 with a services revenue growth of 7.5%. And, you know, it's on account of this weakness, which has happened for the second consecutive quarter, that this stock has been an underperformer. And I think the stock has slipped a little bit more. It was down 10.5%.
Yeah, now it's nearly at its 52-week low. 52-week low is at around 571, so it's virtually there. And Rima, also they are guided for the DLM business to grow by 24 to 25% now is what he's telling us. Earlier, they said in excess of 30%.
Yes, so there is a cut in the services and the DLM guidance. Overall revenue will be cut, though they hold on to their margin guidance. Let's see how the story plays out over here when the numbers come. Get into a break?
Yeah, let's get into a short break. You come back. In fact, we'll talk about a whole host of buzzing stocks in our Movers and Shakers segment. Stay with us.